Are you dreaming of the day your investment can finally set you free from your 9-to-5 grind? Well, that day might be closer than you think. Today, we're diving into the Schwab US Dividend Equity ETF, better known as ticker symbol SCHD, and showing you how an initial $50,000 investment could potentially outpace your full-time job's income. Your time's valuable, and I'm not going to keep you hostage. Here's everything we're going to talk about today. Number one, we'll explore Schwab's US Dividend Equity ETF and dive into what it is, its low expense ratio, and its dividend growth focus. Number two, we'll cover why SCHD excites me and discuss its performance and consistent dividend yield. Number three, we'll go over a real-world example and I'll illustrate how $50,000 in SCHD could outperform your full-time job through dividends and growth. Plus, I'll give you a couple of other bonus scenarios. And number four, I'm going to wrap things up by shining a spotlight on the incredible benefits of SCHD as a long-term investment. And trust me, you'll want to stick around to the very end because the grand finale, it's going to be epic. Something you definitely did not see coming. And if you're new here, don't forget to hit that subscribe button and ring the bell so you never miss an update. All right, let's dive into the famous Schwab US Dividend Equity ETF and cover what it is, what it does, and its impressively low expense ratio of just 0.06%. Think of Schwab as your future retirement that you can use to get peace of mind that gives you a solid foothold in the market with a mix of stability, dividends, and growth potential. This ETF, or exchange-traded fund, is like a carefully curated playlist of stocks across various sectors, offering you a piece of the action in everything from tech to healthcare. But here's where it gets interesting. What sets SCHD apart is its focus on dividend growth, meaning it specifically picks stocks that not only pay dividends, but have the potential to increase those payouts over time, all while keeping your costs low with its minimal expense ratio. So investing in SCHD is like planting a seed that grows, not just through the value of the ETF itself, but through increasingly larger dividend checks without eating into your returns with high fees. It's designed for those who are playing the long game, looking for steady income and growth, making it a standout option for building your investment or retirement portfolio. In essence, SCHD is more than just an ETF. It's a gateway to financial growth, offering a balanced approach to earning from the market's ups and downs with the added perk of being incredibly cost-effective while always paying dividends. Let's break down why I love SCHD, and I think you'll see why it's not just any ETF on the market. Picture this, SCHD is currently trading at around $79 per share and it's near the all-time highs, which beckons the question of, can it go higher? First, we're looking at the big picture and having SCHD as a 30-year investment. So in the overall scope, today's price doesn't matter over a 30-year time frame. And second, the Fed plans to lower interest rates, which makes borrowing money cheaper for everyone, including big companies. For an ETF like SCHD, which holds a bunch of these big companies, that payout part For an ETF like SCHD, which holds a bunch of these big companies that pay out part of their profits as dividends, this is great news. Lower interest rates mean these companies can save money on their loans, make more money because people are spending more, and ultimately share more profits with their investors through bigger dividends. Dividend stocks, especially those with stable and reliable payouts, become more valuable to investors in a lower interest rate environment because investors are willing to pay more for the perceived safety and income generation of these stocks, which is likely to lead to a higher stock price for SCHD. But here's where it gets really exciting for conservative investors that desire a low-risk portfolio. The top 10 holdings of SCHD are stable stocks that have withstood the test of time. Texas Instruments, UPS, Home Depot, BlackRock, Cisco Systems, Pepsi, Lockheed Martin, Pfizer, Chevron, and Bristol-Myers Squibb. It's a dividend lover's dream portfolio. Diving deeper, SCHD's sector exposure is brilliantly balanced with 17.12% in industrials, 16.73% in financials, 15.9% in healthcare, 11.95% in consumer staples, 9.25% in energy, and the rest are spread across various sectors. This level of diversification means you're not putting all your eggs in just one basket. Even if a few stocks don't perform as expected, the ETF's broad coverage shields you from significant impact. Now, let's talk about dividends. The trailing 12-month dividend yield is 3.41%, which may not be that high, but it is consistent and something we can likely count on for years to come. Here you can see SCHD's dividend growth over the last 10 years has been steadily increasing, and you'll see why this is important when we start plugging the numbers into the dividend calculator. I'm going to use conservative numbers today. Now, one key figure we need is the average yearly growth of the dividend payout. Over the last 11 years, from 2013 to 2023, it's been 11.16%. Keep this 11.16% in mind because I'm going to be even more cautious and use 8% in the dividend calculator for the expected annual dividend amount increase percentage per year. I want to make sure these numbers aren't confusing. Our next key figure is the stock appreciation. Since inception, SCHD has increased by 212%, which is about 19% per year. However, I think that's too high and not realistic to continue moving forward. Looking at the 5-year average, it's 10.37%. I'm going to be super conservative and use 6% for our expected annual share price appreciation percentage in our calculations. The key figures I'm using for both the expected annual dividend amount increase percentage and expected annual share price appreciation percentage in the dividend calculator are much lower than the historical averages. I want to make sure you know where these numbers come from so you don't think I'm just making this stuff up. I'm being extra conservative on purpose. If you like how I'm breaking this down and being careful with the numbers, let me know in the comments so I know to include these types of explanations in my future videos. Looking at the bigger picture, with these conservative numbers, I'm going to show you why SCHD is a great choice for long-term investors. The real magic happens when you reinvest your dividends back into SCHD to purchase more shares. This method allows you to supercharge growing your investment over the next 30 years thanks to the power of compounding gains. It's like rolling a snowball down a hill. The more it rolls, the bigger it gets. That's the secret behind building wealth with SCHD. Now, let me show you how just $50,000 in SCHD could beat your full-time job and retire you rich. And if you feel I've earned it, a quick hit on the like and subscribe button shows some love and support for my videos. And for those diving deeper into trading, my Patreon has real-time trading alerts, and if you're interested in trying out my custom trading view indicators, there's a free trial link below. Thanks, and with that covered, let's play with the dividend calculator so you can see the math. Let's get our dividend calculator set up. First thing, we want to come down to the distribution frequency, and we want to change that to quarterly. We want to make sure the drip is on, so we're reinvesting. Our starting principal is going to be $50,000. Dividend tax rate, we'll leave that at 15%. The initial annual dividend yield, that's 3.41%. Our expected annual dividend amount increase percentage per year is 8%, and we just covered where that number came from. The expected annual share price appreciation, 6%. And remember, both of these numbers are conservative. Our years invested are 30. Now let's go ahead and calculate the dividends. In our first year, we're starting with $50,000 in principal. Our annual dividend works out to $1,726.93. And if you look at the numbers, they're not that impressive, and that's completely normal. After 5 years, we're looking at principal of $70,633, annual dividend $2,631. 10 years, we're at $110,000 and $4,511 in dividends. After 15 years, now it's starting to get a little bit better, $174,310, $7,851 in dividends, dropping down to 20 years, $280,000 with $13,892 in dividends, 25 years, $459,000 with over $25,000 in dividends, and now you can see the cumulative effect and big changes are happening, and at the end of 30 years we're at $767,667 and $46,013 in dividends. So to summarize, our dividend portfolio after 30 years, it's up to $852,838. The total return, 1,606%. Average annual return, 9.92%. And the annual dividend income is now $52,104.55. Not too shabby. Now, I know everybody can't rock dropping $50,000 into SCHD today, so let's play with some different numbers. Let's go with $10,000 of starting principal, and our annual contribution, let's do $100 a month, so that would be $1,200 per year. We'll keep everything else the same. If we're going to calculate the dividends, now we're going to see still quite sizable after 30 years, $374,000, a total return of 713%, and our average annual return, 7.24%. Let's say you can beef that up a little bit and go $200 a month, so we're at $2,400. hit the calculate button, and now we're looking at $577,000, a 6.72% annual return, and the annual dividend income, $35,281. And let's go one more. Let's go with $300 a month, which many of you guys can swing, so that would be $3,600 a year. And when we calculate dividends, look at this, $781,000 roughly, a total return of 561%, average annual return 6.5%. Not too bad, and our annual dividend income is now up to $47,711. And now as a bonus, I want to give you one more scenario. I'm a real big fan of investing in tax-advantaged accounts, so if you could do this in a Roth or a Roth 401k, you wouldn't have any dividend tax rate, and double check with your CPA on that. So let's change that dividend tax rate to 0%, and let's see how it changes our numbers. All we do is hit the calculate dividends button, and boom, our ending balance is now $1,029,000, average annual return up 10.61%, and our annual dividend income is $62,878. Guys, if you can do this in a Roth IRA or a Roth 401k, definitely, seriously consider going that route. Playing with the dividend calculator is fascinating, and while we can't know for sure how the next 30 years will unfold, I've chosen very conservative numbers compared to SCHD's past performance. My conservative approach suggests there's a strong possibility that the actual results will be much higher. Here's a key insight that strikes a chord with every investor, whether you're well experienced or just beginning. The belief that you need a massive fortune to build a future where your investments support you is just not true. With smart choices like SCHD, even a single investment of $50,000 or starting small and consistently growing your SCHD portfolio could grow to replace $50,000 in income over time. Patience and smart investing can make a huge difference. Let's recap our conservative numbers. The $50,000 investment in SCHD turned into $853,000. The total return is 1,606%. The average annual return is 9.92%. After 30 years, the annual dividend income is over $52,000. If you're curious about how the portfolio looks using the 5-year historical averages, hang tight. I'll share those numbers with you in just a moment. Today's video goes beyond just investing. It's about making wise investment choices with an ETF known for its consistent dividend payouts and potential for share price growth. If you're aiming for a financial game changer, diving deeper into SCHD could be the move that helps you build your financial future and sets you up for a great retirement. Don't forget to check out my daily pre-market insights on my YouTube community tab to stay a step ahead in the investment game. Keep it real, and I'll catch you in the next video.